Let me please invite the moderator of this panel discussion, where we'll be discussing the changing face of digital financial service provider, amalgamation of non-FS services with contextual finance. So please welcome Mr. Vipin V, MD and partner, leader, GFF and India FinTech expert, BCG. Can we please have you up on stage, sir? Now I would invite the speakers for this particular session. Can we please welcome Mr. Anil Kumar Gupta, partner, Digital Financial Services, MSC. Mr. Anuj Kacker, co-founder, Freo. Ms. Hena Mehta, co-founder and CEO, Basis. Mr. Vipul Sharma, founder and CEO, ChqBook. Sir, we'll be taking a few questions at the end of the session. Okay, so may I please invite Mr. Rakesh to join us up on stage.
So, thank you everyone for joining us for this panel. So let me first give a warm welcome to all the panelists. Maybe we can take 5 minutes or 5 seconds each to basically introduce ourselves. We have 35 minutes and we have 5 panelists, so we will not have so much time. So maybe you can do one line kind of introduction, that'll be helpful. Maybe we can start with Anuj.
Hi, my name is Anuj. I'm the co-founder of Freo. We are a digital bank for middle-class India. We have products across pay, save, borrow, and insure.
Hi, everyone. My name is Hena Mehta. I'm co-founder of Basis. We're building all kinds of financial services, hyper-focused on urban Indian women.
Hi, I'm Rakesh Singh. I look after Aditya Birla Finance Limited. We cater to the consumer, personal, and MSME business. And we work with a lot of fintechs and the startups.
Hi, I'm Vipul Sharma. I run ChqBook. It's a neobank for small business owners, kirana stores, chemists, hardware stores, and such like.
Hi, ladies and gentlemen. Good afternoon. This is Anil. I'm coming from a little different background. We run a consulting firm company by the name Microsoft Consulting. And as part of that, we work very extensively in Asia and Africa for the underserved or unserved customer segments. So like for that, we work with policymakers and right up to the fintechs, those who are providing useful solutions for them.
Thank you. So myself, I'm a managing director and partner with BCG. So with that, let's get started. So if I look at, as most of us are aware over the last 3-4 years, the fintech industry has been evolving very rapidly. And the business models have been repivoted so many times. People have been trying to figure out what's the right business model which can lead to profitability. How can they increase conversion rates? How can they drive inclusion? There are many objectives which has been being chased by fintechs over the last few years. In that context, today's topic, which is basically the changing face of digital financial services provider, with the emergence or era of contextual finance, is a very pertinent topic. So as most of you are aware, contextual finance or embedded finance has been or at least a buzzword in the industry for some time now. So what I'll do, and we have a very good mix of traditional NBFCs, we have fintechs, we have consulting members, etc. We have a very diverse kind of panelists in the panel today. So it will be good to hear from them in terms of how they think about the contextual finance and the future of, how it's going to disrupt the financial services in the future, right? So let me start with maybe Anil. Anil, you have been consulting with many of these players, similar players in the market. In your experience, or from whatever you're hearing, are you seeing a fundamental shift in the industry wherein the financial service providers are moving away from traditional way of serving or providing standalone finance to more embedded or contextual nature?
So actually, frankly speaking, to me, this contextual finance has been there for several decades. So if I recall, actually, I'm fairly old in this room, and I recall that my father in 80s, he wanted to buy an electric oven. Maybe it was about $400-500 at that point of time, and we were living in Jaipur. So what he did is that he started like putting some money with the shopkeeper, and after a few months, he was able to buy that. And most of us, we see it in our physical world, in the sense like most of you are from the younger generation, you would always see that probably whenever you are trying to do a checkout with white goods, or maybe when you are buying your car, you always see an element of finance, which is kind of embedded finance. To a certain extent, it has been there. So if I were to see that, what is that it is serving? Like contextual finance is, what is that it's serving for the customers? So basically, we all have our needs and aspirations. And what it serves is that it caters to those specific needs or the requirement or that particular situation. So for example, my father wanted to buy oven from that particular shop of particular brand at a particular point of time, and hence it served that purpose. So we have seen multiple such examples, and if we come back, fast forward to digital era, wherein we see a fantastic use case. In the sense, you have the data, you have the artificial intelligence, you have the open banking, and we connect all of them together to provide seamless experience to the customer with a relevant solution that they want. For example, someone is trying to buy a phone on Amazon or a Flipkart. At the time of checkout, financing option is available. So this embedded finance or contextual finance actually is there. Similarly, if you were to buy your groceries or medicines, you have the loyalty reward program, which is also embedded into it. So instead of a direct finance, what they are trying to do is that they are introducing that element so that you can settle your bill partly by using this loyalty reward program. So to me, if I look at two types of organizations, one is that classic financial services provider, and the other ones which are non-financial services provider, could be say retailers, e-commerce, and all type of or technology players. They are coming together to make sure that this service is available in a seamless manner to the customer. So this is something which we have been seeing in the market, and this has been growing rapidly. And I just want to finish with two things. One is that for me, money is a common denominator. So whatever activity that we do, whether it's buying something or whether you are earning something, everything it gets converted into single denominator, which is money. That is one. And second is that it will be remiss to if I don't say that traditional financing is also not going. So if you see the generic finance, which is personal finance, this is also growing very rapidly in this market.
Understood. So recently, BCG had published a report which basically said that unsecured lending, at least 70-80% of that will be originated on third-party platforms like Amazon's of the world by FY26, right? Now, in that context, ABFL, to Rakesh, to you, ABFL has been one of the early movers in terms of building similar partnerships, and you've been basically engaging very actively with many kinds of fintech partners as well as non-fintech partners. So in your opinion or in your view, will embedded finance or contextual finance disrupt the lending or insurance space like UPI did for payments? What's your thought? What are your thoughts?
No, so I agree that embedded finance has always been there. The new names have come in, BNPL, buy now, pay later. All personal loans which we took, or anyone who took, is you take it today and you pay over the next 12 months, 24 months, 36. But the positioning is different. Embedded finances, I think it's really helping the customer in terms of realizing their aspiration or their any product which they want to buy instant. And how is that really happening? You have enough data now. So earlier, you could have done it, but you have to apply for a loan, and you will have to submit your identification document, your cash flow documents, now everything is available online. And I think the India stack, if you look at, that's really has helped this embedded financing to happen instant. So KYC is available through Aadhaar. You have the UPI and the digital transactions which you are seeing, and I think the number of transactions we saw last month, it's grown above 10 billion. So I think then you have the account aggregator, the bank statements are available. So you can underwrite a customer for small ticket loans also instant. And you are able to provide the financing immediately. So I think that's how this is really working. So amount of data which is available today, that's helping to propel this entire embedded finance, which you want to call it. Also, a lot of time we really look at embedded finance in terms of more consumer segment. But if you look at the SME or the business owners, MSMEs, a supply chain finance is also embedded finance. You supplied and the invoice is discounted upfront, that's embedded finance. And we just recently launched our B2B, the digital platform, Udyog Plus. We have built the entire journey, which is digital and integrated with OCAN. We are integrating with ONDC and the large ecosystem. So clearly, I think it's just not the consumer side, which a lot of us really focus on, but the MSME. And that will really help the economy. And that's an underserved segment from a credit point of view, underserved segment, MSME, close to 50% of the MSMEs don't have access to formal credit. So with this embedded credit which is available or embedded finance which is available, you will be able to finance immediately. So on OCAN, the integration which we have, if there is a government supplier, we can finance as a purchase order financing. So the supplier can take the money, go get the inventory and supply to the government. So clearly this entire space will really help the credit penetration to go to the next level. So clearly the way we see it, embedded finance, and that's happening because of all the tech stack which we have built. And in terms of, yes, we are a traditional NBFC, and which I think we see what is our strength. Our strength is strong cash flows, strong liabilities profile, strong balance sheet, and a lot of these new fintech, they have solved for a lot of customer problems, and they have reached out to small ticket customers where their needs are very small ticket. If we would have tried to do it, the cost of delivery would have been so much. So I think just collaborating with them, leveraging the infrastructure with the fintechs have built, the government public platform which is getting created, OK and ONDC. So we want to leverage this entire fintech ecosystem, the government platforms, and our own ecosystem. So we do a lot of this embedded finance within Aditya Birla Group. So to give you an example, a dealer of Ultratech, he wants to buy cement, I give him money upfront. That's embedded finance.
Absolutely, absolutely. It makes sense. I think we heard from both from a consulting perspective as well as from a more of a traditional NBFC perspective. Let me just come to Anuj and Vipul. Both of you have been running digital lending kind of platforms. So I think the question to you, one of the premise or one of the main reasons why people believe embedded finance will disrupt the market is because people believe that if the finance is offered at the right point, in the right context, then the conversion rates will be much higher. And also it will help you drive better adoption of some of these financial services, right? So in that context, what is your view? Have you experienced something like that? What's your view in terms of driving adoption because of embedded finance? Maybe we can start with Anuj and we can go to
Sure. Yeah, so traditionally I think, and Rakesh will allude to that, is whenever you had salespeople on feet on street, when they would go and give loans to people, they would ask what is the end use case, right? And that typically behavior would drive slightly better conversion rate, slightly better risk profile, so on and so forth, because there's some, it's not a hypothetication, but at least you know that why the customer is taking the loan, right? So it was the early stages of context, to your point, right? The context was I want to buy a car. The context was I want something to buy something in the house. It could be unsecured. The context would I want something for medical. So I understand, okay, there's a genuine need. You're not faking it and so on and so forth. So without the context, I think nothing else will work. It's just that the way context has been driven over the years has been where I would probably just take your end use case, or I would be standing at the counter. And today at the digital space, at the time of checkout, I'm saying you've bought some specific, let's say you bought a shirt, and that could be very small ticket size, or you bought a flight, could be slightly higher ticket size, or you bought something on, like you said, on an e-commerce platform for 50,000 rupees, and that could be, so that context becomes extremely, extremely important. Having said that, unsecured typically is the money in the customer's bank account. So now you may say that I have a context of buying a phone, or a context of doing something better in my house, or I have a wedding, and you've taken the money and gambled it all away, right? So I think, and we see that behavior a lot. For example, depending on if we know that India has a profile, you have a lot of gambling apps, for example, or if you have a certain kind of very high risky profile in terms of what kind of apps that you use, we see some correlation there, and that's true across everybody. So it is, context is important, but you also need to have a large part of your technology stack, your fraud detection tools, a lot of the way your processes are set up where you genuinely understand the context is right or not. But without context, I think if you just were to be very open-ended, I think, I think it'll be very risky, and you see that behavior a lot because a lot of people on digital side, at least, money comes into the bank account. It doesn't matter what you do with it. Unless and until the money is going to the merchant, and I presume you are not asking about that, because the money going to the merchant is a very different ball game altogether. That is consumer financing or BNPL. That's very different. You're talking very specifically about money in my bank account. Whether I give that context, whether that context is right or not. If you are able to get that context and verify that, I think that journey is far more smoother. The experience is better, the performance is better, and you'll be able to do much more from that perspective. At least that's what we have seen.
Absolutely. Vipul, any thoughts, different thoughts?
Yeah, look, I think, of course, we've spoken about lending. And I think what's happening in India right now is that there's this, sort of an operating system upgrade, where when you had PSU banks, then you had all the private sector banks, they were still providing the same CASA lending, but it was done better, there was better servicing, there was, of course, a lot more aggressiveness about it. And now, right now, you're going into this whole digital ecosystem, with UPI, etc. And there's a ton of data available. So therefore, customers are now moving to apps. That's the reality, right? So it's be it CASA, be it UPI, of course, is insane. So so you can actually then look at the data and figure out, where is he using it. Like in our case, we have current accounts for MSMEs, and they will actually take loans which get disbursed in those current accounts, and then they'll use it on UPI or something else. So we are then able to track what exactly is he doing with that money. So it's an unsecured loan, but it starts getting end-use monitored, and that's something that's great. But I think there are many more problems to solve. Like you were saying, MSME, the gap is like, it's too big, like $1 trillion. It might as well be $100 trillion, right? It's so big. And like, we open like 500 current accounts a day. But if you look at the total number of MSMEs, like 8, 10 crores, going to 15 crores, it takes us like 100 years to open accounts for all of them if you have to upgrade them. So there's a lot that needs to be done if you want to, let's say, upgrade everybody's, on the MSME side or on the consumer side, their experience in digital very, very fast. UPI has taken like 6 years to go from 0 to like 300 million users. It'll probably take maybe another 2 years to go to maybe 600 million, right? And I think that's what digital adoption allows you to do, which is that what maybe private banks took 30 years to do, I think this wave of digital will probably do it in maybe 10 with far more bigger impact. I think that's really the crux of it, which is that at a foundational level, you're actually going through an upgrade. And like you said, it was BNPL now. Earlier it was a personal loan with an EMI. Yeah, sure. But the whole delivery system, the underwriting, the data access, and how customers are using it, credit on UPI is going to be massive game changer as well. So again, there's context because suddenly every unsecured line will be actually used on UPI. So you will suddenly have the data of where is he using it. You will know exactly the GPS location, what is he paying for, who is he paying to, all that data comes in, and it will actually help. And I think people are not thinking about how can we, for example, use that data to maybe improve the credit profile. How does that go into bureau, for example, right? If I'm using it at, like it already happens in insurance companies where abroad, if you're using a car well, like you drive within speed limits, you're not going crazy on corners, you get a better rate on insurance. Maybe if you're using your money better, not, throwing it away and being a...
The India 2, India 3 or the Bharat story, you tell them I'll give you 10,000, 50,000, 100,000 rupees. They are more than happy to give all the kind of data that you want because they need money. They may not be true for insurance because they'll say I don't want to let go of my premium money. I don't want to pay that 500 rupees. But if you give me 1,000, 2,000, 5,000 rupees, I will give you whatever you want. But and they're more than happy to give it. But I think having tools that explain in their language, explain the context like you mentioned, explaining to them that, hey, you don't take it from these street lenders because they're going to charge you an arm and a leg tomorrow. Take it from the formal financial ecosystem. That a lot of the part has to be done, and those are the building blocks. It's not that the banks are not doing it with branches and all that, doing it, a lot of cooperative banks, localized banks. And yet, after so many years, it's still underpenetrated, right? Our debt to GDP is pretty low as compared to anybody else. Our credit card penetration is still pretty poor. And there's a reason for that. It's even after so many schemes and branches, it's been there. It's because I don't think we've spoken in their language. It's always been that you want money, come stand in my door, stand in the line, and I'll tell you. It's like it's not the other way around. It's like the consumer has to choose, not the other way around. Today, the banks end up choosing that you can come here, you cannot come here. So if you build that trust to say that I'll verify you and I'll verify you in the right possible manner, in your language, at a right price, and okay, because of that, I'm able to pass the benefits on to you, I think those building blocks are super critical for us to be able to penetrate deeper.
Got it. So Rakesh, I think if I look at from your perspective as a financial or balance sheet provider, many of these context, while obviously within your ecosystem you will be doing or it's possible for you to do embedded finance, but a lot of the embedded finance also happens in third-party platforms, right? And as a balance sheet provider to such platforms, what do you think are some of the fundamental building blocks or capabilities which you need to have to basically ensure that it is facilitated? For example, you're now offer it in Amazon as a, let's say, Amazon platform, as example as BNPL or whichever product you want to take it. What are some of the key capabilities you think you should be as an NBFC should be building which can enable that?
So first of all, we are not a balance sheet provider. We don't provide balance sheet to anyone. If I have to provide a balance sheet, I will underwrite that Amazon, I will underwrite and give a loan directly to Amazon. So I don't have to do. Here we are providing the end customer, a solution to the end customer, and that's the reason. And the customer is available on that platform, and that embedded finance at that point in time to meet that need is what we are really solving for. We are not here to provide any balance sheet to any startups or any fintech. We have our own very focused strategy in terms of how we want to go ahead and do business. But look at this way. And credit is changing in India. And credit has changed in India in the last 3 years post-COVID. If you look at, credit has changed. And the two things which is driving this is one is formalization of economy, if you look at, and we might not realize it, but when the GST was implemented, the monthly collection was what, 60, 70,000 crores every month. It's gone to 1.6, 1.7 lakh crores. That's clearly showing that many more small businesses are coming into the ambit of almost formal economy because digital payments, we have seen how the UPI has changed that. And once a transaction comes into the bank account, it's formal, and you can underwrite basis that. So clearly, that's one formalization of economy which is taking place. That's one factor. The second is the new to credit, and I think we just heard new to credit customer. And now there's so much of data available for the new to customer also. And we have seen that their performance is as good as a credit bureau score of 750. So alternate scoring methodologies have been and scorecards have been built to underwrite new to credit. And that is also helping. So credit is going to expand. And embedded credit also is important because, see, I will find it difficult to give a 1 crore to a small business, but I am okay to give 50,000 rupees to a small shop owner. So what embedded finance does it, you're financing, as we heard from Anuj, that for end use. That small ticket transaction I can fund. And once I have seen the behavior of that customer on our books and also on the bureau, I can give a larger ticket size to meet his working capital, to expand his business, to meet his day-to-day business needs. So clearly, I think embedded finance will help build the credit history of these customers over a period of time so that then you can take and underwrite a loan which is slightly larger ticket size. You can start small, but over a period of time, as the credit history gets built, then you can make it. So I think all of this is going to, and embedded credit will expand the market, credit market going forward.
Understood. Maybe I'll come to Hena now. Hena, the question I had is, when you think about the third-party partners, which are like whose core offering may not be a financial services, how capable are they to basically embed financial service into their platform, and are they able to offer a seamless service or seamless kind of experience to the customers? Or and is that even restricted to unsecured? Because unsecured, it's well played out because everybody knows that unsecured lending has been a seamless journey across all platforms. But when it comes to non-unsecured, like for example, a mortgage loan or a slightly more complex loans, how seamless have those journeys been?
So I think from whatever we're seeing now, or to Anil's point, I think it's contextual finance has been around for a long time. I think platforms should focus on their core competencies, right? Finance, financial services is a regulated space. You do need to check your compliance boxes. You do need to take care of things like fraud, and all of that is really, it's real, right? And so I think having to suddenly develop that DNA may not be feasible. Of course, people have done it. But I think partnering with, and we hear this term banking as a service, those sort of providers who take care of that aspect, but still offer your customers the experience that you want, will be, I think, how this will go about. Of course, these non-financial platforms, what I believe they do need to do is maintain their brand and the experience for their customers, right? And that's what will build loyalty. It shouldn't look like, hey, I'm shopping for something on Flipkart and then I'm being taken to this, random, loan app to like apply for a loan or whatever it may be, right? So I think that experience needs to be consistent, cohesive, and it can build obviously a lot more revenue, stickiness, customer experience, etc. And so I see that's how it could play out.
Yeah. So maybe Vipul, I'll come to you. Recently, RBI came up with the digital lending guidelines, which basically defines the parameters within which the NBFCs and the fintech partners can partner. So do you think, and again, we have recently had the data privacy laws also coming in. So how do you think it's going to impact the overall embedded finance space?
Look, I think obviously the DLG is a welcome move because it kind of removes a little bit of the ambiguity. Or there was I was telling in the finance ministry, I said everybody's like deer in headlights right now. When the FLDG kind of ban happened in October, there was a lot of ambiguity in the industry. But I think DLG from RBI has clarified that a lot in terms of what are the guardrails, what is the ecosystem going to look like. You have fintechs who are non-regulated getting categorized as LSPs. Instead of, let's say a Google or an iOS store taking sort of calls in their own, now the government is telling them, yeah, this is what you need to do, and they're sticking to that, right? So that equation has changed a lot. And it's obviously helping companies everywhere. So I think those are extremely welcome moves. I think there's the RBI is also very aware that there is innovation that needs to happen. And there was a session just in the morning with them, and basically saying that there is innovation, but you need guardrails. So it shouldn't be like like crypto happened in some parts of the other parts of the world, right? Didn't happen here. So I think that's a good thing. But there's a lot of innovation happening for sure. So I think those norms are very welcome. Opens up a lot of things that fintechs can do with NBFCs, they can do with banks. A lot of banks earlier were not doing, for example, things like FLDG, etc. with fintechs. Now suddenly they can, because now it's like really put down on paper that it's allowed and so on and so forth. So I think those are welcome moves. I think on the digital privacy bill, I think even the deputy governor yesterday and everybody else has been saying that there's a lot more that needs to be done over there in terms of how it gets defined. What are the roles and responsibilities? Because there are fintechs who have customer data. How does that get defined? The penalties are massive, right? Like the first thing is the penalties, 250 crores. Like, okay. Like, so it's huge. yeah. Like, I'm better off just going home. But I think the good thing is that, the regulators, all of them, are going to think about it, come up with regulation around it. Thankfully, the cost of securing data has been coming down. So, if you're on cloud, encrypting stuff, making sure it's safe, has come down. So I think from that point of view, it's secure. But then, yeah, there is a big risk of everything is digital. So it can go out.
Thank you, Vipul. I think, Anil, I think you're almost on time. Any closing remarks from us, from your side?
So I think there is a lot of that we discuss. I think a lot of discussions serve towards the credit side of it. Actually, if you look at this embedded finance, I would like to look at it both from the credit as well as the non-credit side of it. That is one thing that I want to say. Even on the credit side, I think we are missing a large, I was saying, economically active middle. So which is a set of people, we estimate around 600 million people. And similarly, there are millions of such enterprises. I don't think there is much we have been able to do even on the credit side. And there is a very fundamental reason. It's like that, how much capital do we have to disperse? If we have ration of capital, I think there would be a challenges. Whatever we do, unless we grow as a company, as a economy, as a country, we will always find it challenging. The second part is that where we see a very large use of embedded finance is all about, say, all your payments. For example, a lot of COD was happening. Now it has come down. So someone has embedded over there. Like, can you collect remotely from the people, even at that particular point of time? It's a just-in-time kind of thing that they have done. There are a lot of things which possibly can happen on the advisory side, which can lead people to buy insurance cover so that they can protect their lives, and pensions so that they can live their life even after their productive years. So I think this will have to go beyond credit in most of the embedded finance, and probably we'll see more use cases. And this will again lead to, if people want credit, they can take the credit because they will have the digital footprint.
Absolutely. So thank you so much. I think it's been a good discussion. I think exciting times ahead. I'm sure we will maybe connect after 2 years later and we'll be discussing how embedded finance has disrupted financial services space. So once again, thank you so much for everyone, and thanks to audience as well. Looking forward.
Thank you.